So in this lesson, we will have a look at what GST is. So a GST is a goods and services tax that's applied. So GST in Australia is an additional 10% that's added to most goods and services. So when you purchase an item, on your receipt you will have a breakdown of the selling price and the GST. Now, sale prices displayed at counters in Australia most of the time include the GST, so you don't actually pay an additional 10% at the register. That's included within the selling price. Now, in other countries like America, the GST is added when you go and pay at the register. So, for example, an item may be $10, but then at the register, a 10% GST will be added to it, as opposed to Australia where that $10, if the selling price is $10, the 10% GST is actually included there, and that appears on your receipt. So we also have another concept that's called pay as you go, so shortened for PAYG. Now this is the income tax. So a certain amount of money is withheld every time you get paid, and this amount depends on your income. So over here we have a residence tax rate. So depending on your income, there's different thresholds that apply. So if you're earning between 0 to 18,200, you actually don't get to pay tax. If you're paying above $18,201 but less than $37,000, then you pay 19 cents for every $1 over $18,200. So that's your tax. Now, if you're in the upper branch, so $37,000 and $90,000, you pay a fixed rate of $3,572 plus an additional 32.5 cents for every $1 over $37,000. So as we increase, as a salary, the taxable income increases, so does the amount of tax you pay. So for 90K and above and less than $180,000, you pay a fixed rate of close to $21,000, so that's $20,797 plus 37 cents for every $1 over $90,000. And lucky last, if you get paid $180,000 or more, you pay a fixed rate of $54,097. So $54,097 plus 45 cents for every dollar over $180,000. So let's have a look at an example. So over here it says calculate the annual income tax. The annual income tax and the annual net income for an annual gross income of $68,000. So that is the gross income. That's what your paycheck's on, but you will pay tax. So from this money, a certain amount would go towards tax. And that's what we're going to have a look at Part A, annual income tax. And annual net income is how much you actually end up with. So assume no other pay deductions are made. So first of all, overall, you are getting paid $68,000. This is your gross income. But amongst this, a certain amount is going towards annual tax, and that's what we're going to have a look at. So $68,000 falls into this bracket over here. And for that bracket, we are paying $3,572, that's a fixed rate, plus 32.5 cents for each $1 over $37,000. So we need to break this figure up. So to start off with, $68,000 is going to be broken up into $37,000 plus the remainder so the difference, sorry, between $68,000 and $37,000. And that gives us $29,000. So all we did was we subtracted $37,000 from $68,000, and that gives us $29,000. So $37,000 plus $29,000 gives us back $68,000. Now the reason why we've splitted $68,000 into two parts is because of this figure over here where it says $3,572 is a fixed rate, then there's 32.5 cents for every dollar over $37,000. So this $37,000 over here corresponds to the fixed rate of $3,572. Now this second part over here corresponds to 32.5 cents. So we are going to pay 32.5 cents, which is 0.325 for every or each $1. So for part A, where we're looking at the income tax, we have $3,572, which corresponds to the $37,000 plus 0.325 for every $1 above. Now the figure we're looking at over here is $29,000. So altogether, the total tax, income tax, is $12,997 for a $68,000 gross income. Now part B says annual net income. Well, the annual net income, which is how much you actually end up with, is your gross income, which is $68,000, take away the income tax, which is $12,997. So we end up with $55,003. So this figure is how much you actually end up with.